This panel consists of three, and there's only two, so Avino Silver will not be here. David Wolfen had an accident and not able to attend. However, we have New Pacific with Gordon Neal and Endeavour Silver with Brad, and we will just start by having them talk a little bit about themselves and their company so we know who we're dealing with here, and then I'll give a slight read on Avino just because they are not represented by themselves. So Gordon, why don't you go ahead and start.
Hi, my name is Gordon Neal. I'm the president of New Pacific Metals. We are in Bolivia. We're an exploration project. We've been around for probably 10 years, but got this project recently, and we've done about, over the last year, we've done 50,000 meters of drilling.
For the best editorial on junior mining, visit cambridgehouse.com/mining. Click the link in the description below to learn more.
And I've been in the silver business with Brad for quite a while. I was started at Mag Silver, and that's who I am.
And welcome everybody to this silver panel. I'm Brad Cooke, the founder and CEO of Endeavour Silver. We're a 15-year-old mid-tier silver producer. Last year we produced just shy of 10 million ounces of silver and equivalents. Our only equivalent is gold, so we're a pure silver gold producer. And we're focused on organic growth. We're going to roll out 3 new mines over the next 3 years to grow our production by 50% and shrink our costs by 33%.
Short and sweet, and this one is on like a bad background, so I'm going to have to use my cheaters here, and I'll only read a paragraph, but I think it's only fair to David to do this. So Avino Silver, since 1968, a proven model for growth. Avino Silver and Gold Mines operates 2 silver mines in Mexico with a gold project under development in British Columbia. Through Avino's 50-year history, our innovative, pioneering approach has fostered resilience, initiative, enterprise, and long-term relationships while shaping Avino into one of the industry's lower-cost silver producers. So now that we have all 3 companies, we have lots of questions about silver, and if we have time at the end, I will ask you to come up to the microphone right there and ask your own question. So let's start off with a softball here, the kind of questions I get all the time. So Brad, I'll pick on you first. Mr. Brad Cooke of Endeavour, why is the silver ratio 85-1, and what's going to happen to it in the future?
I think the silver-gold ratio is actually a very useful indicator of where you are in the precious metals cycle. And as most of you probably already know, gold being nothing much more than money is quite different than silver, which is mostly an industrial metal and from time to time decides it's precious.
For the best editorial on junior mining, visit cambridgehouse.com/mining. Click the link in the description below to learn more.
So what that means that in a precious metal cycle or a financial cycle, gold usually goes first and silver lags behind, and then when people finally say what's wrong with silver, it plays catch up. So the ratio is really good for telling you where you are in the cycle. And at least since I've been in the business since 1980, I've seen a few precious metal cycles. And whenever the gold-silver ratio rises north of 80, it's usually an indicator that you're getting close to the bottom of the precious metal cycle and the top of the US dollar cycle, because they're inversely related. So I think at 85-1, or today probably closer to 82, it's already started to decline from its 86 peak. The last time we saw the ratio this high was probably 2008.
Correct.
And we all know what happened after that. So I'm quite bullish. I think that the indicator is going in the right direction finally. And I would not be at all surprised if we see over the next 3 years or so that ratio comes down to 70, 60, 50 and below. In fact, a quickie history, if I may. At the peak of the 2007 market, it got as low as 45. And at the peak of the 2011 market, it got as low as 31. And we're not done with this cycle yet, so I do think that the performance of silver will really shine compared to gold as we move forward in this cycle.
Your turn, Neal.
Yeah, I agree with Brad. I've never understood, the ratio is important, but I've never understood why with the silver being in the industrial metal that it is, and given that it's used as the gold is used as a hedge against the dollar, that it does have that separation. I'm hoping, I agree with that. I'm hoping that this is the bottom of that separation, and we'll see some collapse on the ratio. Again, the amount of silver that is used in industrial metals or industrial purposes in solar and all of the other things that it's used in electronics should actually overcome this, but it just seems that we can't do that. But eventually, when they do start to move in the right direction and we're at the bottom, I think that we will see that collapsing that you've been talking about, and all we can do is hope that happens soon. And we've both been through a lot of cycles, or we all in this room been through a lot of cycles. So let's hope that collapses. But again, I don't understand somehow why there's always that separation and it widens out given its industrial uses.
All right, Mr. Gordon Neal, I'm coming right back to you. So I made a little statement, and then I have a question. The statement basically is silver demand is rising to its role as an industrial metal and its return as a safe haven investment, and I think that's in our future. But as you alluded to, we see more and more uses in silver in what we call the environmentally friendly atmosphere. Clean energy, electric vehicles, health aspects. I'd like you to comment on where you see that going. If the trend's going to continue, what do you see?
Yeah, I mean, it started out in the early 2000s. It was a germicide in garments for wounds, for military purposes, etc. I only see that silver as an industrial metal is going to keep getting used more and more, especially in electronics. Originally, Germany, until about 2 years ago, was leading the charge in using silver in solar panels. Now China's taken over, it being the leader, and if you could think about China producing the amount of silver panels it's going to produce, or solar panels it's going to produce, you would think that the use for industrial metals in silver would just get more and more. RFID is another area where it's being used. So as I said on the past question, I see it get used more and more in an industrial use. It goes out of circulation because it gets used, not like gold, but at the same time, it doesn't seem to get the same kind of joy that gold does.
Brad, would you like to add on anything on that?
Sure. Silver demand. Last year was a tough year. We saw investment demand, that is coins, bars, and even jewelry, decline. And across the board, not just the US, but China and India. We saw solar photovoltaics actually pull back for the first time in many years. And supply was flat, so it was a tough year for the silver price. Mm-hmm. I don't think we should be using last year as a guide for this year, because I think those trends are actually in the process of turning. And so I actually expect that even with the changes to the laws in China for solar photovoltaics, that we will see a resumption of photovoltaic offtake. There are some very large mega projects that have been announced but not yet executed. For instance, Saudi Arabia is proposing the largest solar farm in the world. So I think the future is, in fact, bright. We have to give it 3 to 5 years to see the full breadth of new demand. And electronics are kind of like bedrock demand. By the way, electronic demand was up last year, and it just keeps on chugging away at 2 or 3% every year because the world still loves their electronic devices. So there's lots going on. The new 5G phone, for instance, will be using silver. Obviously, it has electronic circuits. But you can't just take your existing phone and plug in a 5G chip. So it means that there could be a whole new world of new cellulars coming soon, 5G phones. The electric car, last year internal combustion cars consumed more than 50 million ounces of silver. That's 5% of global demand. Who knew that ordinary cars use so much silver? Well, it's because they all went digital in the last 20 years. The electric car is still, I think, fuzzy as to how much silver it will consume, but simply the projections on how quickly the electric car is going to take over from the internal combustion car is, I think, evidence enough that there will be more silver offtake in the automobile industry. So I think the demand side is actually pretty attractive in the medium to long term. And you know what, the supply side, we're the only metal, the common metal, that is primarily a byproduct of other metals. Us primary silver miners, we produce less than 30% of the new mine supply. The balance is all from copper mines and lead zinc mines and gold mines. And we just came through a 7-year bear market for most of those metals, so there were no new copper mines and lead zinc mines and very few new gold mines. So the byproduct supply fell 2 years in a row. Last year it was flattish, but I do actually expect byproduct supply of silver to continue to decline until we start seeing new copper mines, new lead zinc mines, new gold mines. So I think we are setting up perhaps even for a perfect storm on the fundamental side for silver.
Thank you, Brad. So anyone with a question out there, get that baby, get up off your seat, move to that microphone, speak your question. I will repeat it, and we'll get you an answer. So anyone interested in having their question answered, you could begin to move. And while people are contemplating getting up off their butts, I just want to comment on the industrial side. If you go back to 2000, you look at the industrial demand of silver, it was 35% of the market. And our supply chain at that time was roughly 550 million ounces of silver. You fast forward to today, it's about 60, 55 in one study, 60 in the other, so let's go down 55%. And the annual supply is about 850 million ounces. So what I just told you is industrial demand, although it's considered to be a constant, it is not. It has been increasing over the last 15 years at a fairly rapid clip. And not only is it a greater percentage of the market going from 35% to 55%, but that's during a time frame when we saw the market go from 550 million ounces produced mining-wise on an annual basis to about 850 million ounces. Does that mean that's going to take the silver price higher? And the answer is yes and no. All markets move at the margin, which means it's the investment or monetary demand of silver. That's the edge. That's the one that comes and goes. That's the one that gets very exciting. In 2011, we're going parabolic, and believe me when I said there'll be more silver bought above $30 an ounce than there ever was bought below $30 an ounce in this last bull market. And you know what? I was right. I also called the top, but I don't want to make this too much about me. So I want to go back to the panel on monetary demand. So, Brad, I'll pick on you first this time. With the growing asset bubbles, including the debt levels, uncertainty in the markets, will silver's demand rise because of market uncertainty?
Well, you just spoke to the investment demand that's soon to come, soon to arrive in silver, and it's all related to the macroeconomic cycle. Fact is, these metals typically are inversely correlated with the US dollar, and I think the dollar has been very, very strong for many, many years, tied to the 10-year bull run in the US economy. That bull run's now started its correction, and it's not done yet. So I think that, again, with the inverse correlation, we have restarted a precious metal cycle. We are already off bottom. And I think that given that investment demand is at the margin, it will be a price setter as it arrives back into the precious metals.
Excellent. Gordon, please.
Yeah, so I agree. The issue is, as you said, David, the debt levels. And, gold should, as I said earlier, be a hedge against the falling or rising dollar. We didn't see that as much as I would have liked during the crisis. However, yes, I do believe you're right. It's investments at the margin. We're winding up, and that should wind up seeing silver demand go up and gold demand go up, which obviously the ratio is there. So I agree exactly with what you said. Yes.
Very good. So I'm going to tag on to something you said earlier, Gordon, that you talked about, silver's vast amount of uses. You used garments, and you said military. One thing that is very little discussed is silver's use in batteries. Now, there's what's called mil spec, which is military specifications. which means they want the most rugged, go anywhere, do anything, regardless of what it costs. We know governments know how to spend our money. But mil-spec battery, a lot of those are silver-based. The reason I bring that up is a lot of things that are adopted in the military eventually make it out into the general public arena. So I'll just leave that comment as it is. It's your turn, sir.
Eric Sprott recently at a Western Australian conference spoke about India's demand on silver, which was approximately the world supply in a year. And I didn't hear that incorrectly. Where are these countries finding this silver? Who's delivering it to them? And as we speak today, are we in a deficit or in a supply positive environment right now? What are the stockpiles right now as we speak?
Well, if you don't mind, I'll go first.
Go ahead, sure.
Last year, the silver price basically tanked after mid-year, so I think it's pretty obvious that we were not in a deficit for at least the second half of last year. You can't have the price go down and the deficit go up. And we know that investment demand dried up. We know that solar panels dried up. They didn't disappear, but they slowed down. So that's a quick backwards look. India had a boom of silver imports in the last 6 years or so, largely tied to the changes in the import duties for gold. And all of the precious metal refiners in India found out that they could import doré without paying that import duty. So they were scrambling like hell to import initially gold, and then as the duty on gold rose, more and more silver. There were changes to that import duty in the last 3 years, and so imports of silver into India did slow down significantly. Gold and silver are in the culture in India, so I do expect that when we do see investment demand turn up, India will become once again a leader.
We've got exactly 1 minute left. Gordon, if you'd like to add on, and I'll just add here that I'll be at my booth. This is right out this door. I think it's 12:20. It's just go out the door, hang a hard left. I'll be there. I've got 15 minutes, and I can answer maybe further your question or anyone else's question on the silver market. Gordon?
No, I think Brad covered it in terms of India. It's obviously always been in high demand in the jewelry sector in India, and he's spot on that. So they're a fairly big constant, but given that new tax regime or the import that they figured out, that's where that supply depth or that supply delta came from.
All right. Thank you for your attention.
Thank you very much.
All right.